Ron, you mentioned earlier in your presentation that now is a really good time to be thinking and doing property investment. Can you expand on that a little bit? Why?
Richard, that's an excellent question. In fact, I want to give a gift to all of the people that are asking questions, because it makes it so difficult if you're having a seminar asking people for questions and everyone sits down. So it's a great question. I want to answer that by just looking at 3 reasons why what has happened and 3 reasons about what is going to happen, all right? So first of all, the 3 things that has happened. First of all, you'll be aware that property property goes up in cycles like this. It's not one straight line. And so the important time to buy is, of course, in this time here where the market is flat or going slightly backwards. Now, what we've experienced over the last 6 years is a period of time like probably never before in the history of New Zealand, where it's gone up so quickly. A lot of markets in the New Zealand market have gone up to 3 times in that period from 2002 to 2007, 2008. That's unprecedented, and certainly in my lifetime. And so what people were doing in that time is they were buying property, and there was all sorts of seminars out there. You remember there was numbers of companies doing seminars, inviting people to come along and hearing how they could invest in property. Now, it was very easy to invest in property and make money because prices of property were going up so much. So if you bought 1 month, 3 months later, yes, the price of that property had gone up, you were thinking you were making money. So that encouraged more and more people to go along because everybody was making money in property. But the problem with a bull market like that, and we call that in the industry a bull market, what happens after a bull market is that you have a bear market, and things normally either go down or they flatten out. And so the last 3 years have been a flatten out period. Now, what's happened in that period of time is that people who are buying here have been holding out for as long as possible. And typically previously, when they've had a good time, after 2 or 3 years of a slump, things have started to go up again. So people have been able to retain their properties, and they've been able to get through that slow period in the market. What's happened now is, because it looks like we're still in for a difficult patch for another 2 or 3 years, the market has become very, very scared, and they're saying, what's going to happen? We don't know. And so typically what happens in a market where people don't know what's going to happen is they put their hands in their pockets and they wait. They don't do anything. So there's 2 groups of people out there now. There's people who are waiting, and there's people who are selling, because during the good time, they had properties that they bought. Now they can't afford them anymore, and so they're looking to buy. So what's going to happen over the next period of time? One will say, because is it a good time to actually buy property? Is the market going to go up? Well, you see, the market always goes up. Now, over the last 100 years in New Zealand, property's gone up around about 10% per annum, or they've doubled in value every 10 years. Now, that's been through depressions, that's been through wars, that's been through all kinds of different economic climates. But still, when you look at the averages, it's gone up around about every 10 years, it's doubled in value. That's going to happen again, even though you think it's not going to. And if you're one of those folk, then you're typical of the market at the moment. That's why people aren't buying. But if you listen to a guy called Bob Jones, who started off in property around about the same time I did, and he made truckloads of money, he always said, when everyone's out fishing, I go buying. When everyone's out buying, I go fishing. And this time, at the moment, if you ask Bob Jones, he's saying he's out buying. Why? Because he knows the market's going to respond. It's going to get better. It's not as bad as we think it is. And then he'll be in a box seat, because the properties he's bought now in a down market are going to increase in value. Now, let me tell you just some of the things that will help that to happen. First of all, we're in a situation at the moment where housing is already in a major shortage. There's very little building going on, and so bit by bit, the housing stock that's required for a typical population growth in New Zealand has been going down. Christchurch's earthquake situation has added to that and made it even worse. Secondly, what's happening is immigration is down. Why is that? Because the exchange rate is so high, it's not advantageous for people in other countries to come to New Zealand with a stronger American dollar or a British pound or European euro. So people are staying where they are at the moment. But in time, when that dollar starts to come down again, people are going to make the decision to come back to New Zealand. And so then the market is going to start to get very, very busy very quickly, because not only are you going to have the economic influences which is making the market stronger here, you're also going to have the increased immigration numbers of people coming in, which will therefore increase the demand, and therefore, because the supply is not there, first of all, there'll be a growth in the number of houses being built, but then eventually, because of the cost of new houses will go up because of that, then the existing houses will come back into line again, and people will be buying existing stock. And finally, what's also happening is that there's a global trend now where previously in the early 60s through to the 80s, New Zealand relied strongly on the export market to Europe. And over the last 20 years, that export market has bit by bit started to go down and down, particularly when they formed the European Union. And so our product over there was no longer on the same demand because there was countries within the Union that could supply the product at a cheaper rate. So what's been happening in New Zealand is that our export market has been going down and down and down. But the exciting thing that's happening in the days that lie ahead is that China and the Asian countries are starting to, bit by bit, change their eating habits and their practicing habits. And so in those countries, not only do we have the benefit of a much cheaper transport cost, we also have a far greater population. So that in a place like China, if there's just a small percentage of change of habits in a country like China, for New Zealand that will have a substantial change in the amount of demand for our products. Likewise in the Asian countries, which are Vietnam and Thailand and India, places like those countries are changing their habits, and now you're seeing McDonald's being set up, and they're starting to eat a bit more meat. They're starting to eat a bit more meat and things like that. That's going to change the way that we export, from instead of from Europe and places like that, we're going to start in a much cheaper area to places like in the Asian belt. And so our export market is going to grow, which should mean that our economy as a whole will grow, and that will put us in a much stronger position to be able to go through the next stage of growth in the period of time. But that's going to take time. And so I don't see that the time to experience growth is the next 2 to 3 years. That's going to take longer than that. But what you do in the next 2 to 3 years is build your base. Because every property millionaire will tell you that during the difficult times they built a base, they built a foundation, and then when the market grew, that's when the value of their properties grew, and so then they had the foundation to work off the next period of time. When the markets grew, they could buy again in this period here and then experience the next growth. And that's how you build your property portfolio over a period of time. Does that make sense, Richard?
It's outstanding. Thanks, Ron.
Great.
Could you please explain why you think property as an average offers the best returns as an investment option?
Great question. Excellent, Carol. There you go. There's another little gift. Thank you very much.
Thank you.
Okay, so why is property investment such a great deal? The main reason why property investment is such a great deal is because of the word leveraging. Now, if I say the word leveraging, what comes to your mind, folks?
Well, faster than normal growth.
Faster than normal growth? Okay. So when I think of leveraging, I always think of, from a building background, so I always think of a building setting. And if I have a whole bunch of frames or something heavy that I want to pick up, that I know that I can't do on my own, all I need to do is find a decent stick of 4x2, and I can put it on a block on the ground, and I can lift up many times what I can do without that stick. And that's because I'm leveraging off that stick. I'm leveraging, my weight goes to the block and actually picks that weight up because of the lever. Now, the same thing happens with property investment, because property investment is the only investment that the bank is going to let you borrow money against your investment. Okay, so what I'm saying there, if I buy shares, and if I want to buy a set of shares, I won't be able to go to the bank and say, look, I'm buying these shares, will you lend me some money so I can buy them? Okay? If I'm buying bonds, the bank's not going to say, sure, we'll lend you some money to buy them. I mean, they might give you a personal loan, but they're going to lever that against your personal stuff. They're not going to lever it against the investment. Property investment is the only investment option that happens. And so the exciting thing about that is you can make money off the bank's money. Now, I love making money off the bank because they charge me so much in different costs, bank fees and all that. Every month I see, I've got a number of accounts, every month I see all of these account fees, and it makes me so mad because I think of that advert that says, it's my bloody money anyway. Can you remember that advert, that old guy that was so upset about that? Well, the bank charges me fees all the time. But when I borrow against a property and I buy a property, an investment property, I can get that money back plus a whole lot more. And it really does me good inside here. So, how does this work? Why is it so good? First of all, if I had $40,000 to invest and I decided, what am I going to do with that $40,000? Okay? Typically, if I invested that money into, say, something like shares of a good portfolio, I would be pretty happy if I got between 8 and 10%. Okay? That generally, as an average over, say, 10 years, if I got 8 to 10% on my shares, I'd be pretty happy. So what's that going to give me over that period of time? It's going to give me $4,000 per annum, isn't it? All right? In other words, $40,000 over the 10-year period. Now the issue there is, of course, what do I have to do with that $40,000 as I'm getting it paid to me?
Pay the interest.
Pay tax.
No, I'm not borrowing here.
Right.
Pay
I've just
tax.
put the 40. I have to pay tax, don't I? Thank you, the accountant's wife said that. Okay, so I'll probably, let's say I'm earning around about that sort of 60, 70k, so I'm going to be paying around about, let's make it 20%, so I'm paying around about $8,000 in tax. I end up with $32,000. Is that fair? That's fair for the average.
Profit.
Profit at the end of the day. That's how much I'm going to get. Now, generally, that's what people think of when they're buying shares. Let's see what happens when I invest that $40,000 into a property. Now, I decide I'm going to go to the bank and say, how much will you lend me with that $40,000? As long as my figures, my incomes works out and so forth, they're probably going to lend me $200, or they're going to lend me $160, so that I can go out and buy a $200,000 house. All right? Everyone understand that?
Mm-hmm.
Okay. Now, in 10 years' time, what's this $200,000 house going to be worth, all things being equal? If I bought it at the right time in the lower market, and we've experienced a typical rise in that 10-year period, what's that property probably going to be worth?
300.
400.
400,000. Okay. So, after that period, I decide I'm going to sell that house. What do I end up with? 240.
40. Oh,
Okay, because I started with my investment.
oh, yeah.
Okay, so in effect, my 40,000 has grown to 240,000, or I've had a $200,000 profit over 10 years. Okay, is that all right? Everyone's with me there?
Mm-hmm.
Now, the good thing about property investment at the moment is that I don't have to pay a cent in tax. So whereas my 40,000 here goes down to 32, my 200,000 here stays at 200,000.
I thought you had to pay when you sold it.
No, that's called capital gains tax, and we don't have capital gains tax in New Zealand. You see. Now, then the Labour Party are saying that they will bring that in if they come into power. One has to say, are they going to come into power at the moment? It's unlikely in the next 3 years. But even beyond that, let's say that they do come into power. Then all they're saying is they're going to charge us 15%. Whereas this guy here, who was earning just an very ordinary wage, was already up to 20 or 30%, between 20 or 30%. So even at that rate, if I have to eventually pay capital gains tax, that's why I can't understand why people are so upset or so fearful about capital gains tax. This is a perk for investors. You know, the fact that we don't pay tax is a perk. Even if they charge us 15%, we're still a whole lot better off than if we put that money in shares, because we'll be paying 20, 30, I'll be paying 33%. You see? So, okay, so in this situation at the moment though, I'm paying no tax. So if I split that down to 10 years, I make $20,000 per annum, don't I?
Mm-hmm.
Okay, 10 years I've made, on an average, $20,000 per annum. On my 40,000, what return is that?
50%.
50%. How does that look compared to my, well, 32% on 40 is probably something closer to 80 spread over 10 years is around about, well, as I said, 8 to 10%. How am I looking?
A lot better in property.
A lot better in property, aren't I? Can you see the power of leverage? My 40 grand is the same, but because I'm levering 200,000 from the bank, I'm making money off the bank's 200 grand as well as my 40 grand, and I end up with a much, much better return, despite capital gains tax. Does that sound exciting?
Yes.
Does that sound like you want to get involved in property investment?
Yes.
Amen. All right. Thank you very much.